Hello, guys. Happy New Year. This is Brian, and even though it says 2023 trading goals up top, this is actually not. Those are not my goals. There was somebody who sent me over their goals this year and asked if I could critique it a little bit. And while I was doing so, I noticed that there were so many things that I could point out and that I wanted to kind of use as an example to help more people because I feel like these are very common misconceptions or goals that I feel like may not lead you down the exact right path, and you could waste a lot of time. So I wanted to go ahead and see if I could like bring that to a wider audience. I did ask his permission, and he said it was totally fine. So thank you to that person. You know who you are. Let's get this started and make sure that you guys start 2023 on the right note. So initially here, I'm just going to go through line by line, and then we'll have our thoughts. Even though 2022 was much more difficult than 2021, I actually feel like I grew much more this year, both in emotional intelligence as well as technical analysis. I made my biggest mistake ever this year, which cemented numerous critical lessons. That's perfect. This year is one of those years that was very, very difficult, honestly. Things have changed somewhat during that time when, all the macro events occurred, and obviously we're in a bear market. So part of the thing that I've gotten a lot from people is like, hey, like I feel like I should be doing more, but I'm not seeing the opportunities. It's frustrating. I'm not growing, etc. I want you to recognize that these are not the years that you're like meant to push it necessarily. Like a lot of traders who did really well are starting to have more like calm down results. And that really does have to do with the market. Like no matter what we do, we can't force the market. So like use this time to really cement some of the best practices. I feel like probably the best thing about this year has been really just like recognizing that there are some like majority of the time you have to trade like really well. There's not that much opportunity for error. So you have to have really refined your process to trade this properly. And personally, I feel like I've grown a lot as well in this time. And this is not really a critique, but I just want to make sure that everyone understood like this isn't the year to just knock it out of the park, right? We're going to move forward and we're going to see what 2023 brings. I'm hopeful, but you never know. So the most important of all, risk management, 100%. Maybe I shouldn't read all of them line by line. I think I'm just going to pick apart the ones that I feel like are really important. So bear with me as I read through them, but I'm going to make sure it's a little bit faster. The speed at which things get out of control, for sure. The cost of being wrong and staying wrong. Yes. The benefits of detailed nightly review of my trades taken and the trades I should have taken and didn't. Sure thing. I want to make sure that you guys are really focused on like the execution aspect of your review. That's probably the most important thing, honestly. When at the end of the day, the most important thing for me is to figure out like what each execution represented. Was it a mistake? Was it a proper trade? Or was it a trade that I could have improved on? I measure the P&L, convert that into R, and make sure that my risk is under control and that I'm getting significant wins. Like you have to really be cognizant of your execution data. Something I brought up on the feed earlier, but this is by far the most important thing you can do, in my opinion. Like, yes, there's a lot of things you can say about how you felt and things like this, but ultimately it comes down to how you execute. And based on your execution, you can find the most value in like what needs to be fixed. The other thing is throughout the day, what I like to do is I have a notepad and I just write down like, hey, here's something I feel like can be improved. Here's something that felt a little bit off, or just something I want to investigate later. And you just have a big list at the end of the day. Go through that list. It's going to be really, really impactful for your trading. And if you can come up with solutions or like would-be solutions, they don't have to be perfect. That's really beneficial for your next trading day to implement and see if you've resolved some of your issues, and or if you made your process that more optimal. And this is a way that you can kind of measure like your daily improvement. Like if we're talking about 1% per day, if it's like, you had something on this notepad and you said, hey, now that I'm addressing this problem, like potentially that's a 1% growth, whatever we want to quantify it as. But obviously, as you're a doer, you're going to have you're going to have far more than 1% growth per day. That's a really good mindset for if you're like hitting a plateau. So like sometimes people get really frustrated with the fact that, like, as a beginner, you're like growing really quickly. And then once you start kind of cementing the lessons you need to learn, it's just about repeatedly doing those actions. People find little different plateaus, and it's completely normal. But as long as you kind of have this mindset of like, just make improvements day by day, that's going to be helpful. Okay, the benefit of meeting and making relationships with fellow traders and learning from the progress and mistakes. Definitely, you want to make sure that you create some sort of network. My idea of a network is a little bit different than potentially like what like a trading pod would be potentially, but all's well. I feel like networking is the number one thing that people need to get down. And this is not even like, so far we haven't really talked so much about what he needs to correct yet because we're not there. But I just think this is really important information for everyone. Is like, you want to put yourself out there in the sense that you want to, like, if you have charts that you can show your charts, show your analysis, share news that you got, share like your ambition, even for some people showing their age, like, hey, I'm a really young guy, like I'm trying to do this. Like there's things about that are attractive and draws people in, and you want to be able to like form alliances and friendships with people who can, be on this journey with you, and not necessarily like take trade ideas from each other, but like be there to review and to like pull information. And I think it's really, really important, even if it's just one. And I think one of the really important things that you can do is find someone who's like really aligning with your strategy. And what happens is, if like, let's say someone's doing well, your friend's doing well and you're doing poorly, and there's a disconnect there, like you can figure out, why am I trading poorly? Like, is it really me, or is it the market, or is my friend doing something special? And then you can kind of consolidate that information. If both of you are doing bad, then potentially the market is just poor, right? Like if you feel like you're trading well, you're not doing well, like don't beat yourself up in those conditions, because it happens. And in the best case scenario, you're both doing well, and but I think it's really important to have some sort of like baseline so you can start measuring accurately kind of your expectations. All right, so I think this is more of the meat and potatoes of this video. 2023 goals for risk management experts. If there's one thing I want to be, is I want to be the master of, it's controlled risk management. As Huddy says, be a consistent loser. Definitely. I want to continue using a set dollar R value, which I'll continue to increase every green month until I reach 1% of my account. So this is where I had a big issue. You don't really want to use a set dollar amount of risk. And I know a lot of people want to do this because it feels safe, and it feels like easy, and the problem is, I do believe you want to start the compounding process as soon as possible. So in the DM, we actually resolved this, where I sent him like what I think he should do. So he has a around $30,000 account, and he said, I'm just going to risk $40 because I'm still like learning, and like I don't want to use 1% of 30,000 if I'm comfortable with that at the moment. And I said, that's completely fine. Like that is, instead of looking at as $40 as like 0.13% of 30K, let's think of it like $40 is 1% of 4,000. So this is very similar to actually what I did in the video of the R compounding that I showed, or like just on my own journey, where I had 30K. I subtracted 25,000 to represent PDT. So now I only traded with $5,000 account. Compounding 1% off 5,000 is $50. So very, very similar, and it's completely doable. So what he should do, and what you guys should do, is actually, if you want to risk significantly less on your capital, which I 100% agree with, especially if you don't feel comfortable. Still practice the compounding process up and down, because it is something that you're going to have to carry with you. And the best time to start that is like now. Like, it is so rewarding, and it's so revealing of where you are and where you need to be. And also, it can push you in a way that you would have never pushed yourself if you kept at set R. And this should be done daily. So whatever your P&L you have on that $40 risk, like, add it or subtract it the next day. Take that new balance and let's see where we can go. And we want to implement this with the freeze process, where let's say you're risking $40 and like you'd say like at $100, it would be kind of meaningful for me to risk $100. At that point, compound up and down till you hit $100. Once you hit $100 of risk, then now all of a sudden what you do is you no longer grow your risk. So if you add P&L the next day, don't increase your risk, just keep it at 100. But if you lose, then reduce it under 100 and just keep reducing and reducing as much as you need to. This is going to make sure that you experience that compounding effect really well. And you're going to want to get used to like applying the risk, having no fear, like being comfortable with the wins, being comfortable with the P&Ls, potentially wiring if you need to, and repeat this process as long as you want. Like, so that could resolve itself within days, weeks, or even months at the higher ends. Once you feel comfortable with that, keep moving up. But I want to make sure that you're always kind of, playing with your risk in a dynamic way that adjusts to the market, that's like flowing well with yourself, your performance, and like you're being rewarded for that, or you're mitigating, when you're snowballing out of control. Like, it's really, really important. If I never compounded up and down, after resetting my account after it blew up, I would have 100% been under PTT, and that would have been lights out for me. So I know it's really, really important, and I don't want to see people using set risk. No matter what your risk is, you can adjust that. Okay. More importantly, no more casual 2R losses, unless it was specifically planned for an A+ setup where I planned it to risk 2R, because I'm so sure that this is obviously very rare. So this one I also have a problem with is you should never really have 2R losses. Essentially, like, let's say you have an A+ setup, right? If we're considering the concept I was talking about, this might be new for some people on YouTube, but I have a concept that I took from Merritt Black called ideal trade location versus continuation trade. And I also paired that with my own A to Z concept. So it's essentially the same thing. Like, if the top of a trade is A and we're short, and the bottom would be Z, the ideal trade location would be closer towards that A level, right? But let's say that you're kind of trading mid-range and it's like, we're talking LMNOP, like that kind of range. You could have an A+ setup, like fundamentally, news, everything, but that's a continuation trade, and by virtue of this, the trade grade is going to be way less, because like you can have a great trade at the wrong location and you could turn that into a shit trade, whereas you can have a C trade, like overall it's a pretty bad trade, like, it's not the odds are not really there, but because of where you entered, you could turn that into an A setup, right? So technically speaking, how you've entered and how you've sized into this trade to where you feel like you need to give yourself a 2R loss probably means you're not on that like A grade of a trade to begin with. So what's most optimal in these situations is to actually cut the loss and re-enter, because that probably means you're going to be able to take more position size. You would have taken the same loss that you were willing to take, but you've managed your risk properly, and you're going to be rewarded for that if it works. You're going to be way more size, because the closer you are to the risk level, the more size you can put on. And that's really important for people to understand, because a lot of times people want to get loose with risk, but don't recognize that, like, if you hold a trade on a deficit, like if it's going -2, -3R, even if it comes back and you're right, the win is going to be so much worse. Like, you take that trade 100 times, it's going to be so much worse than just cutting it and putting it back on. Like, that's a superior trade. And we want to get as close as we can to that A, for the ideal trade location as possible when we can. The only situations that like you don't want to cut the loss is if it's some situation where there's literally no opportunity to get another entry. So we're talking about like quick, like a quick move that all of a sudden just like slams back down and it's impossible to react, like those kind of situations, sure. But for the most part, you should not get in the mindset of having this 2-hour losses. Why? Because it significantly impacts your stats. Like, what we want to do as traders is want to maintain a profitable stat line, something you can plug into an equity curve and see like, yes, this works over a long run. When, let's say, we introduce starters and we say we want to take 1-hour loss and we have a 3-to-1 risk reward, if you take 0.5 hour losses on your starters here and there, you potentially would reduce your average loss to 0.75. And if your win stays consistent, so it's a 3 to 0.75, you actually have a 4-to-1 risk reward, which is an extremely good stat line. But let's say that all of a sudden you start taking these 2 losses here and there, you might increase your average loss from 1 to like 1. I'll be very generous and do 1.25, but it could be 1.5, right? So 3 divided by 1.25 gives you a 2.4 risk reward. With the same win rate, with the same everything, all things being equal, 2.4 to 1 risk reward is going to be far less profitable, maybe even not unprofitable. So you see how you can, because you take a larger loss, you're like significantly shooting yourself in the foot. And of course, if we do 3 divided by 1.5, then obviously that's 2 to 1. So even worse, right? So we want to be careful with like over justifying our decisions. It has to make sense in the context of like how it's going to affect you in general. Okay, it says often I have my R and I see it hit and hold on, see if it will come back, and more often result in a net loss bigger than 1 R. This year I want to have losses as close to 1 R as possible, even if that means my entry is wrong and my level is actually lower. I can cut and reposition. Yeah, so exactly, that's perfect. And you should always have a hard stop limit. Not market, but I mean like always have a hard stop. There's no reason not to have a hard stop. You can have a hard stop up to like literally 5 figures of risk. Yes, it's not going to work all the time, but at the very least you'll get partialed out. But before that, you're most likely going to get filled like majority of the time, like 90+% of the time. Okay. There's no reason ever to negotiate your stop loss. Like you made that plan for a reason. You need to eat it. Like you're only going to learn if you take the loss. Like if you always let this thing happen and you okay, it works, like it goes to my wrist, it doesn't actually stay above it and then it comes back down and worked. Like, your system is flawed. Okay, that means there's a mistake there you need to have corrected that you're not correcting, and it's gonna bite you in the ass later on. You let those losers get out of control, it's over. Even when my stop doesn't fully fill or like I get, let's say, halted over, I always take the loss no matter what it is. Even if it's 2, 3, whatever, I always take the loss. Like there's no negotiating this. You have to drill down to your mind like no trade is really worth that kind of risk. It's all a drop in the bucket. It really is. And you don't want to do so much damage to yourself. Like you can recognize that at the end of the day. Look at your executions. That one fat loss you took, that because you didn't respect your loss versus all the other profits that you made, it's going to cut deep. And you're going to say to yourself, why did I care about that? It's because you don't have like a mantra, or you don't have like an automatic kind of response to these situations. For me, my response is I'm out no matter what. There's no excuse. And if you train yourself to think this way, you're going to thank yourself in the future. You might not feel great in the moment, but you're going to thank yourself. Never negotiate. There's no such thing as a mental stop loss, okay? Just you're fucking out. Okay, consistently profitable trader. I want to continue with the guideline Scott Switterman propose. I've seen this before. Let me just go through it first. Be green every week during the month with an allowance of up to 1 red week. Do number 1 for 3 back-to-back months. End green on trailing 12 months without any 1 3-month period canceling out any. Okay, that's really confusing. Basically, I don't agree. Why? Because I feel like these are very personalized to himself. Like with his strategy, obviously he's going to be more high win rate, whatever. Like being green every week may be something really important to him and to other traders, but ultimately, like you can't force the market to do anything you want. I can have red months. I can have red weeks and a string of red days. I could even have 2 red months in a row. That doesn't mean I'm not a profitable trader. Like, I'm just trading the best I can. And if there are mistakes in there that's causing that, I need to fix those. And I don't deserve to have a green month, first of all. But you can still be a consistently profitable trader. It's nothing to do with green or anything like that. That's completely irrelevant. Personally, I've had, like, even in my best year, I've had a month of making basically no money. Like, if by these rules, I would be not a profitable trader. It makes no sense to me personally, and I don't think it really matters. Focus on the execution. Make sure that your system, is well defined, and you're sticking to your guns. And if something is wrong about it, you correct that, and you just keep trading it. Like, you trade your plan, and that's all that matters. You can be profitable without being green every single day or every month or every week. Okay, it's completely irrelevant. Focus on less. I need to continue to improve at few setups and be more selective in my trades, especially at market open. I'm often reaching in too many directions, end up missing all of them, or even worse, chasing my own plans and resulting in poor execution. I think this is fine. Execution. I want to improve on holding on to good entries. I want to stop moving stops emotionally and let trades play out. This requires I take better entries and play actual setups. No chasing, no forcing. Once I am, and I need to strive for 3-to-1 risk reward like Brian Lee has shown us. If you make that minimum requirement, you can find a way to accomplish it. I want to focus on improving my risk reward, or to removing trades that don't have potential risk reward and end up draining my mental capital, which causes unpredictable results. Wow, I'm reading really fast. Basically, I agree. I like this. I do want to say that you cannot just say, I want to improve holding on to good entries. You can't just say, like, I want this to happen. Actually, what you need to think about is more of like, what is the system I can implement to create the outcome I want? And what are the frameworks that I can use? What mental models can I use to give myself the best chance to follow, like, my ideals and to follow my standards? So, like, for example, with the A to Z concept, A being the high, C being the low, I have to say it a lot because it's kind of new, honestly, that I've been talking about it. You have to recognize that no matter, and this goes back to before, no matter how good the trade is on paper, the fact of where you enter the trade determines the grade for you much more than the setup itself. Because as a continuation trade, you have lower risk reward. In order to make these trades profitable over the long run, you have to engineer the stop loss, which means you just pick some random level so that you have the right amount of shares, that you have that you can get 3-to-1, whatever, or that you can even get a reward that's even worth a damn. Okay, and that is difficult because let's say that you get in after, like, the stock's given 75% of its gains, right? There's only so much left, and in the event that those stocks start bouncing, you can start taking loss after loss after loss after loss needlessly, because the risk levels you're picking doesn't make any sense. And while you're convicted about this trade, you're ignoring the fact that the stock has a range that you're not participating in because you're so emotionally attached to that position you have, which is a low quality anyway. So in order to kind of curb that, you want to start thinking about being in that ideal trade location spot. You want to be closer to the risk so you can have more size. Those trades naturally give you more risk reward. Those are higher quality trades in general, and you want to be able to define, like, where those ranges are for that trade. And the easiest way is just figure out where the high is and just be as close as possible to it. Not saying you have to be, like, really, top tick, but I'm saying, like, you should know basically at what point the trade is like a chase, right? And why those trades are bad quality. Like, recognize that in the mental model. Like, we know it, but can you quantify it in some way? And as far as holding on to good entries, like, let's make a system for that. Like, let's make a condition or trigger for exit. Like, let's think about ways that we can systematize this so that we're not, going at the end of the day being like, oh, I should have held that longer. Like, what does that mean? Would you have held that longer? Like, make it more black and white so that you can look at it and be like, I didn't hold it to my price target. This was my price target. I didn't hold it to that point, or I didn't hold it to this trigger. Whether it's a moving average, whether it's time, whether it's about liquidity, whether it's about a predetermined technical level, anything like this. Like, give yourself something to measure yourself by and to tweak. Like, you could say, oh, I have this certain price target and it never hits. Okay. Never hits. You take 10 trades, never hits. Well, your price target's too greedy. Then let's start pulling that up and see how it would be. Like, it's not really about winning every day and winning every day. Like, it's really a constant like iteration of just optimizing and like setting yourself up for future success. Like, once you've built out the framework, then those changes and those improvements stay with you for the rest of your trading career. Like, who cares about the last 10 trades? Like, we're talking about a career, okay? So make sure to measure yourself by something that you can control and that you can optimize and tweak at the end of the day, because that's the only way you're really going to improve. Otherwise, you're going to keep giving yourself these false promises, and you're going to keep saying like, don't do this, don't do that. Everyone knows what not to do and what to do, but how can you make that possible through your process and through your systems? If this happens, then I will do this. If it goes past my stop and I get partial filled, I'm going to cancel the order. I'm going to slam out. If it goes way beyond my risk, I'm going to cut no matter what. Like, you have to have these very black and white rules that you can follow, and better yet, if you can have it somewhat automated, or like part of your process, like on Excel, for example. Like, if I know where my -2 or -3 or -4 is on a trade, even how unlikely it is that it'll go past my stop, and I've just pre-programmed it there. So every time I enter my risk, like, I know where those levels will be. Because if I ever like stare those numbers down on my chart, I know it's not as bad as I think it is. People like tend to overestimate how bad things are. And if I'm like, okay, it's just -2, -3, I don't freeze. I just take it off, Like, those things help you. And same deal with like the stop losses. Like, have stop losses. There's no reason not to have it. It will protect you. It will do what you decided that you wanted to happen. Okay, no more pulling stop losses. Like, get into the habit of always taking the stop loss. Put the limit out always, and see how that works for you, because like, it's nothing to negotiate with. There's never a good reason why you shouldn't take it. Okay, it's like, I have to just come back to it again. If your stop was wrong, okay, take the loss, and at the end of the day, figure out why that happened, what you can do better, if it was an outlier, if it's something that needs to improve, or if it's just, whatever it is. Like, these are the moments to learn. You're not going to be a 7-figure trader with these kind of habits. You're going to be a 7-figure trader once you have the right habits and you can do them repeatedly. Stop focusing on today and focus on year from now, 2 years from now, okay? What does a successful trader do that you're not doing, and how do you do that? Okay, daily review. This year I need to improve my screen recording. Okay, that's fine. I need to continue journal, but make journals a little simpler so I don't burn myself out. Yes. So I see a lot, just, massive paragraphs, lots of, considerations for like how I was feeling, how I was sleeping. I didn't do my exercise last night. I was worried about this or that. Unfortunately, like, a lot of that stuff doesn't matter. It does matter to some degree, but like, what matters mostly is how you've measured up to your system. Like, what was I supposed to do in black and white terms, and what did I do, and how can I resolve that? I have traded under really poor conditions myself, and I know that a lot of those things are excuses, and they don't need to be there. That's why all I need you to do is focus on execution and the little notes that you write to yourself throughout the day. Those are the most important things. You don't have to have this amazingly robust journal, and I honestly feel like if you don't read it, it's not going to be useful. And I recognize that way later in my career. It's like I put the things down that I'm going to read. So let's say that you go back and you look at like what happened a month ago or 2 months ago. If you look at your journal, like what are the things that you actually care about? For me, it's all about the execution. And I also want to just know little notes about like, oh, how was that week? Like what were the conditions that week in the market? Were there anything that like, was there anything related to the cycle or some kind of news or what? Some kind of theme, like I want to know that kind of stuff. I want to take this extra hours and spend those I spent on my journal, use them on similar and replay price action from the day earlier in the week. That's totally fine. I think price action potentially is a bit overrated. I think most of what you need to know will be on the chart, and you can utilize price action when, let's say that you want to verify some signal or some trigger for your entry or exit that was specific to that moment. And if you can do that, totally do it. But I find like it's very difficult to actually go through hundreds of charts with like, the exact tick data. Like in my opinion, the best kind of system would you'd be able to like go through hundreds of charts like very quickly. So for example, if I wanted to go over a full month of data with my charts, I could literally just scroll through them with my left and right button because I have screenshots, and I'd be like, okay, I see that, I see that, I see that. Yes, it worked. No, it didn't work. Yes, it worked. I could see it very quickly. That's the ideal. And so with like critical moments, stuff like that. So it says I want to review critical moments as break out on the tape, whatever. If you know what I'm talking about with like A to Z recently, the reason why I call it A to Z is because A and Z is the only thing that matters, and it's like very easy to understand. The price action in between is useless, honestly. Like you basically you only want to care about like where the stock would potentially top out or bottom out and where it's going. And all the short-term price action in between can literally be caused by one trader or a group of traders. Like people are always covering and shorting and entering and selling everywhere. In my Discord, I have dozens and dozens of examples of like literally causing the breakdown or breakout myself with my own orders. So it's like if one random person can do it, then it's very difficult to kind of say like this will always happen. Like you don't know what anyone's going to do. And in my opinion, like you don't need necessarily to see that, but it's all good. Okay, I want to trade less so my stats are more meaningful instead of chasing scalps that can't be accounted for specifically or systematized. Yeah, this is 100%. So, like always think about your stat line. Like this will help you be very disciplined, because like let's say you shorted something and then you covered premature and it keeps going, right? The next trade you put on is probably like if you're trying to catch like the last remainder of that move. Number one, it's a continuation trade and it's probably real close to Z. But number two, like think about how that's going to affect your stats. Like you might have an average of like 2 to 1, and then you take this like 0.5 to 1 trade, and all of a sudden it drags your stats down. Like you don't want that to happen. Meaningfully speaking, if you're talking about taking that trade 100 times, it's going to be unprofitable probably. Like the risk you're putting on is kind of undue. And if you don't put on risk, like let's say, I'm just going to give it a little bit of wiggle room and see if I can keep going, then your stop's just not going to be appropriate, right? So you might get stopped out for no reason, or like it might cause you to take an emotional trade where you don't accept your stop because you yourself know that the trade's crap. You kind of have to let it go. The more we can focus on getting our average stats up, the better. Like it's all about that. That determines your profitability in the long run, and you should be able to notice the differences. Like I mentioned earlier, with having your average loss go down to 0.75, all of a sudden you're trading literally at a 4-to-1 level without changing a single variable. Like you're getting 3-to-1 trades, but your average winner is actually 4 times your average loss. Like that is huge to understand. Huge. It changes the trajectory of your trading in such a big way. And if you know that, all you have to do is maintain that. Continue to learn and improve. I want to continue watching videos in Webbies regularly, at least 30 minutes to an hour per day. This includes rewatching Gritani chapters or old Webbies and also new material. So, a lot of what you need to know, there's not that much meaningful content out there. Like, I know I've talked to Gritani about it before. It's like, some of the strategies are kind of outdated, or like the thought process, like even in his second Trading Tickers 2, I think, he mentioned like, some of the things, like the way he thought about position sizing and whatnot, it's a bit different now. Like the way he manages risk. Like you have to recognize that there are some principles like position sizing and risk management, stuff like that. Like, especially if you're paying attention to a lot of the information I'm sharing, it's like, that's all you need to know basically. And it's all about executing it. So don't feel forced to like consume content for the sake of it. What I tell people is like, when you want information and you see specifically why it's going to be effective for you, you're going to find that knowledge. Like you're going to be asking the questions at that time. For example, if you read a book or you watch a video, you might get something new every single time you watch it, even if you've watched it 4 or 5 times. The reason being is because you're receptive to the information now based on where you are in your journey, based on what you're experiencing, based on what you need. And it's much simpler to recognize what you need, find it, or search for those answers, live in the questions. Basically, like if you keep having a focus on something and you keep asking questions related to it, you're going to find answers, or they will be like bubbling up to the surface of your subconscious eventually. It might take a long time, but depending on the problem, but a lot of times like that's where you're going to find the answer. You could have gone over so much information that you couldn't apply now. Like that's the problem with forcing information down your throat. Just at the end of the day, you want to think about what can I improve, what could be improved, or what, and the execution is really just kind of reflects it to you in the most clear way. Okay, reading books is fine. Every day I need to improve by 1%. We already talked about that. So one of the things that I did really well as a best practice in the past was at the end of the week, I would just ask myself, like, even if I had nothing to improve on, I'd be like, what could I do better? And you'll be surprised just asking yourself that question. What could be done better? What could be improved? What kind of comes up? Like it could be literally like the color of the indicator or the spacing of your Excel. These little things add up. And that's what's really exciting, is that every optimization you make follows you throughout your career. It has a huge impact. The easiest example I give people is like, I damaged my hand so much during gaming, and it's like, I recognize that there's this shelf life on my hand that's a lot quicker than people my age. And I need to be clicking less and less if possible. So where I can, I try to look for ways to like create a hotkey that does multiple things at once. Or, I set a different button that will left click. Like little things like that. If you save yourself 10 clicks over the course of the year, over a decade, it's a huge effect, on your bottom line. So think about every little improvement as in that context. And then that becomes really exciting. Yes, most importantly, continue to learn from mistake. Turn every mistake into a gift, into a tool, into a strength. Yes. Turn into a system. Let's be clear. Okay, let's see. Some of the patterns, all good. I would, well, that's fine. In 2022, I worked harder, but I realized I could have worked smarter. I sat my screens 12 to 6 hours a day every single day, 7 days a week. Some of that time could have been used more wisely. So, yeah, don't feel like you have to be at your desk the entire time. Like, rest and self-care is definitely really important. Like, for me, if I don't take a nap every day, whether it's during market hours or after, I just can't think clearly, and I don't have energy for anything. And it's okay to take time off during the market even. Like, I've spent a lot of time sleeping during market hours, taking naps. Because ultimately, once you have a trading plan, all you need to do is follow it. Like, everything else doesn't matter. You have to get in the mindset like everything does not matter in between, because it truly doesn't. And when you believe it does, it's going to force you to be there. You're going to be burning all this energy that you didn't have to. It's something where you can literally put alerts on, put a hard stop, and boom, you're good. Like, that will help your trading a lot, recognizing it doesn't matter. 2023, I want to be sticking a specific schedule. Yeah, that's fine. Okay. All right. This is fine. And financial goal. So I think this was the last thing that I saw. $1,000 a day. This won't be the case at the start of the year. Okay, so he says, I'm purposely setting the goal slightly high that will help me push further faster. So never set P&L goals. Set what I like to say is that I have wants, and then I decide what systems will get me there. Like, they're not really goals because like I'm not actively focused on it, but like I feel like, oh, it'd be really cool if I had that, or that's what I kind of I'd love to see that. I'm not so hyper focused on it, because like what I notice a lot of times is you'll smash your goals, and if your goals are like not properly set up, a lot of times you'll hit it and then you'll just like feel empty, or like you'll just reset another goal, another goal, another goal. Whereas like if you think about more so what actions are required to get to what you want, like what are the small things you have to do every day, I guarantee you'll smash your goal. I also don't want people to think about like how much to make per day, because like you can't control the market. It's like this is the same thing as consistently profitable trader. It's like the market's going to do what it's going to do. You're just there to execute on it. And if they're, if you're doing it right, and you're doing everything right, and your system's down, like your system's well optimized, whatever, like that's just what it is. You're always, the worst thing possible you think can happen will always happen at some point. There's black swans and fat tail events all the time. You could say to yourself, like, there's no way I would take 3 days in a row max loss, and it will happen. Trust me, it happens. Even if, no matter how small of a chance it is. And it can happen with you executing perfectly as well. Like, that's just the way the market is. You have to accept that. But in any case, like, you want to think more like a big picture and less about the day to day, because those kind of thoughts are really intrusive in terms of like your risk management. Like sometimes, or even just capping your potential. Like sometimes you'll be like, oh, I hit my goal, I'm gonna stop because I don't want to lose it. You know, like you get too attached to the number, or sometimes you're like, I was up that and now I'm not, and I feel like a loser. Or I have that, so I'm not going to put any more trades on, even though like the fact that you even did it probably means that there will be more trades that are successful, or that the market is aligning with your strategy, or that you're executing well. You know, like that's the whole process of the compounding, where the more that you do well, the more that you'll increase your risk. And the worse that you do, the less risk you apply. And both things can be either market or performance related. But it will reflect in your P&L, like where you're at, and it will be very natural. And I just hope that you don't let this get in the way. And it's like, even I can think of another scenario where it's like you don't take the loss. You know, it's like I have this goal, and so I'm not going to take a loss. I'm just going to let it go, or I'm going to just see what happens. Like these kind of things don't matter, because what mattered is how you did it, how you got there, what was the process. And you know, it's just the way I kind of see these notes. Like I definitely don't want to bash anything. I'm just saying I feel like I want to make sure that people have goals that make sense and they're kind of working towards things the right way. And I'm not saying like everything I'm saying is, I shouldn't even say right. I'm just saying like I have a lot of experience with this, and I've lived through this myself, and I've verified a lot of the methods that I used to grow my account, and I've been on this journey and I haven't really forgotten like how it feels. So I'm just trying to share what I know, and hopefully that it can impact you and help you, be a better trader. So anyway, thank you guys, and I hope you have a good 2023. And please don't send me your goals. This is enough for me. Thank you.